So welcome once again, and today we're going to look at partnership as already stated. The process of preparing partnership accounts is as follows. So I hope you have got a pen and you want to take down some notes.
Okay.
So the process is as follows. Okay. So how is the process? Number one, you need to, first of all, establish the profits, isn't it? So prepare, you need to do the statement of profit or loss. Are we together?
Yes.
Number two, you need to share the profits. We have got a special account known as the appropriation what? Appropriation account. Number three, you need to populate what is known as the current account, update the partner's profits and losses in the current account. Okay? Then in some cases you may need to open the capital accounts, but I think in most cases we do that from the balance sheet. So we'll go to the statement of financial position. So how many major steps apart from the adjustments is 4 steps, isn't it?
Yes.
Yes. So as I said, I'm going to try to look through my records. I'll share with you some of the other works that I've done so that you can consolidate. So we're going to start with, what are we starting with? We're starting with the profit or loss. Is that okay?
Yes. The question, like I can't see the question on your screen.
Okay, there's no problem. Let me try to share. Are you able to see the Excel?
Yes.
Yes. So I can only share one item at a time. So what is the name? What are the names rather of the partners? We have got F Banda and Ochanda, isn't it?
Yes.
So you can just say Banda and what? And Chanda,
What?
right?
Yes.
A statement of profit or loss for the year ended. Which year is this? It's 31st December
2022.
31st December 2022 is done. So we're going to have 2 columns. Of course, we are dealing with Kwacha. We're going to have that. Okay, it's just a moment. Good morning. Good. Fine, how are you? Yes, Hardline Chartered Accountants. I'm not in a position. I will try to call you again. I am doing something right now. Yes. Okay, so let's progress. We are going to begin. So what do you expect to see? Sales or revenue?
Yes.
Let's go on the credit side of the trial balance and check. You can see I
Sales.
can see 41,650.
Yes.
Now, if I'll be interchanging like this, there's likely to be extra work. But anyway, since the question is simple, 41, we said 650, isn't it?
Yes.
Yes. So we are going to throw in adjustments, of course. But for now, yes, for now, we concentrate. So what do we expect after sales?
Returns inwards. If there's no returns inwards, we go to opening inventory.
Very good. So allow me just to follow the way the examiner made it. So we've got sales instead of revenue, then we've got returns. And then, so for returns, we check on the debit side of our trial balance.
There's no returns.
It appears as if you have to be very careful because sometimes it is just one line. No returns. So let's get the inventory figure in advance, 59. You can see this.
Yes.
Okay, so opening inventory. How else can you do this? Okay, next we've got purchases, isn't it?
Yes. Yes.
Again, for the sake of those who may complain of having poor eyesight, 2850.
2850.
Okay, then we add any carriage inwards, if there is any.
Carriage inwards.
We go and check on the debit side of the trial
There are no
balance.
there are no carriage inwards.
No carriage inwards. Confirmed, right?
Yes.
What's the next line? So we are going to have to check for closing inventory, which I saw in the last note. Inventory at the end of the year was 51. You can see this?
Yes.
Yes. So here we put 0. Then we say what is the total cost of purchases. Then we have got less what? Closing inventory. What is the...
Sir, I have a question.
Yes, please.
On discount, I can see two figures of discount. So, like, how do I identify that this one is received and this one is
Yes,
allowed?
good question. Yes, so the allowed one is an expense. Discount allowed is an expense, so it's on the debit. Expenses we debit. You remember?
Okay.
Then the received one is on the credit. Income we credit.
Okay.
Is that okay?
Yes.
Yes. So we confirm this one that our inventory closing is 51. So now we're going to go and get our so-called cost of sales. Cost of sales we have already gotten now. Cost of what? Sales or cost of goods sold, as the case might be. Ideally, this number must be a minus 21,650. So I'm going to put it as a minus. I said 21,650, right? Isn't it? Yes.
It's giving us 2,000.
Then what is the gross profit?
20,000.
All right. Thank you. Yes. Let me just, format a little bit so that our figures for negatives found in parentheses, found in brackets, all right, this is better. Now, of course, in your exams, you need to do these underlinings. That's your job. So our gross profit is there. Here we expect to have other income. What are some of the other incomes that you know? You have got rent received.
So discount received. That's the most common one.
Yeah, income received. So there's also reduction in doubtful debts. I don't think that I saw any, but for the sake of peace, we can go and check on the credit side. Hey, you can see they're there. They're here. And there are the two of them. So the discount we're looking for is on the credit side. It's income, isn't it?
Yes.
950. So we are going to give it a specific name. Discount received, isn't it?
Yes.
How much? That is
950.
Okay. 950, not 650?
Yes.
All right. Interesting. Very, very interesting. Yes. So they said 950. Yes. Great. So there we go. We have got a 950. So let's remind one another about this other discount, which is an expense. Okay. The question was not very complicated. So we hope that we'll not struggle to balance it. Okay, there we go. So this is, I can call this total what? Income. Although you will not be penalized if you don't call it anything. So now we're going to less what?
Less expenses.
Very good. What are some of the expenses that we need to deal with? I would like to start with the expenses that are subject to adjustments. That should also be your approach in the exams. So this one will go to the appropriation, we leave it for now. The point number 2 is an appropriation item, we leave it for now. Then we come to wages, they are owing 750. Then we go and check for wages in the trial balance. We can see here we have got 552, isn't it?
Wages 52, yes, wages and salaries.
Yes. So you write here wages and salaries. You open brackets, you say 52, isn't it? Then you add the 700 and what? So accruals we add. You know that, eh?
Yes.
All right. Next.
Rent prepaid.
There's a rent expense. We just call it rent expense. So we go again. We can check for the rent and rates. It's actually rent and rates. 26. You can see this figure?
Yes.
So we come down here and we check how much was prepaid. 150.
150.
So rent and rates. I saw it 26, right?
Yes.
Minus. This time around we less, isn't it?
Yes.
How much are you getting?
26 minus 1 2450.
All right, thank you. Next, we get on to
Depreciation,
which is straightforward, and inventory has already been done. So the depreciation is how much?
300.
300, yes. So after I've done this, you can now go back to the trial balance and check for, allow me just to, oh my goodness, I don't know what I've done. Allow me just to do this. I'm putting them side by side so that I can just be fast.
Okay.
Yes, then I'll revert later on. So accordingly, I hope you can see. Maybe those who are going to use phones will have a challenge, but with good pixel, this should not be a challenge. So which expenses have not been accounted for? I think there's discount allowed, isn't it?
Yes. General expenses.
Yes. How much is the figure for discount allowed? 1, 2, isn't it?
Yes.
Then we have got, you said,
General office expenses.
Rent and rates has been done, wages has been done. Then there is office furniture.
What about
That's an asset.
irrecoverable receivables?
Where is irrecoverable? There's no such a thing as irrecoverable receivable. Okay, it's supposed to be recoverable debts, but anyway, yeah, it's going to be treated as an expense. So I've seen it. Let us. So we are going down. We've skipped everything. So we only have got 2, isn't it?
Yes.
Irrecoverable. Yeah. Receivables. Wow. Sounds very fun, eh?
Receivables. I think receivables and debtors are just the same.
Yes. Yeah, there's the same. It's just that this phrasing is quite long.
Oh, okay.
We normally use irrecoverable debts. We normally say irrecoverable debts. What about the next one? This is a general what?
General office expenses, which is 1,250.
Yes. 1,250. Okay, so there we go. It is now our job to we want to find the sum of these expenses. So one of the expenses you need to look out for is any loan provided by one of the partners which carries interest, should be included here.
Okay.
If a partner provides a loan to the business, the interest must be treated as an ordinary expense. So my sum here is coming to that. Please counter check. Do you have a calculator?
5,150 plus 2,450 plus 300 1,200 plus 550. I'm getting 11,700.
Okay, that's okay. So I think we are the same. So let's find the profit. What is the difference between that figure and that figure?
9250.
Okay, that's correct. Okay, we are done here. We are done here. Yeah. Okay, great. Let us make some progress. So the next step is to deal with what is known as the appropriation account. The appropriation what? Account. This is an account where we share the partners what? Profits.
And profits.
Losses. Very good. So who are these guys? There is Banda and Chanda.
Yes.
Appropriation what?
Account.
Appropriation account for the year ended 31st December 2020 what?
2022.
So we begin with the same profit. So it's the same profit that is the subject of our discussion. This. So you can either appropriate a profit or a loss. So having 0 here is having 0 here is very extraordinary. It doesn't normally happen. So I'm going to show you what to do. In the appropriation account, you first of all add any interest on drawings. You have it there?
Yes.
Interest on drawings. Director? Yes? Yes. I think you text me. I'm not in a position to speak now, Director. I am at home. No, I'm doing some work. I'm in class. You text me. Text me. Okay, can we proceed?
Okay.
Interest on what?
Drawings.
So we have got who and who? We have got Banda
and Chanda.
and Chanda. Okay. What else do we have? So the new less interest on what? Capital. Again, we have got who and who? Banda
and Chanda.
So we are going to utilize the power of Excel. There we go. Then we have got N. Salary is one of them who is entitled to a salary. Then after that we have got residue what? Residue profit. Then down here we've got profit share. We need to share according to the what? According to the question instruction. Would have been done. All right. So let's begin to populate. So for the sake again of time, let's do this. And let's begin to see what is happening. Interest. Let's see here.
Don't have any interest on drawings.
The capitals have started. Then drawings is given there in the question. Current account balances are given. Then apparently, I don't know if we are lucky, there was no interest on drawings. So we're going to put 0, 0. So because we are teaching, we need to show you everything, all right?
Yes.
Then we come to capital. We are told at 5%. So this means 5% of what is the capital of Banda? 10,000, isn't it?
Yes.
Yes. Yes.
Chanda. 7,000.
So this is How much is 5% of 10,000? Is it 500? 500, right?
500, yes.
So 500. What about the other person? Again, 5%. Wow. So there we go. Over how much? 7,000?
350.
Okay. I like what you have done. You have used your mathematics. So when we add the two, we have got a minus 800 and what?
50.
Then we come here to the salary. Who is having the salary? There's one of them who is having the salary. According to the question, it is who? Chanda. 25. Isn't it?
Salary, Chanda. It's
Not,
where?
not two. Not two.
Oh, okay.
Yeah. So other salaries have been included in the profit or loss because they are for other workers. This person is a partner, so you can't include their salary in the profit or loss.
Okay.
That's what the point is. So how much is that? You said 2.5. So again we less, isn't it?
Yes.
Yes. Then we need now to establish the residual profit. But before we do that, let's check the rules. They are sharing profits in the ratio 3 to what? 3 to 2, isn't it?
Yes.
So there we go. 3 over 5. You add the two numbers, eh? 3 plus 2 is 5, isn't it?
Yes.
You know how to do the ratios. Then what about this other side? That is 2
over 5.
Good. So let me just widen it a bit. So let's do the work. We're going to find the sum, the residual profit, by saying the residual profit here will be the sum of all these numbers on top. I don't know if it's gonna agree. This your calculator is showing how much?
Wait, let me just calculate. How much was the gross profit?
The gross profit, how is it related to what we are doing now? Okay, I'm going to show you very soon. Just in a moment. My computer is misbehaving. You said how much was the what? Gross profit?
Gross profit. Oh, not gross profit. I mean net.
The profit.
Yes.
The net profit.
Yes. So it's giving me 950. Oh, 5,900.
Okay. Okay, let's pick them. Yeah, sounds correct. So let's do the apportionment. This by 3 over 5, isn't it?
Yes.
That's a number. Then this will be equal to this by, again, if you want you can subtract, 2 over 5. So here, as you can see, the argument is The partner who has contributed more profits, more capital rather, must get more profits, isn't it?
Yes.
Is that correct?
Yes, sir.
So at the end of the day, you should have a what? A new, isn't it?
Yes.
Yes.
In the exam, you need to write new.
No, you can just put 0.
Oh, okay.
Although it's not needed, you know. It's not needed. It's just something to show that you have completed and concluded what you are doing. So we are done here. The next stop is a partner's current account. Are we together?
Yes.
Banda and who?
Chanda.
Current what?
Account.
For the year ended. All right, guys. Okay. So I'm going to do something that I think is much more simpler than what is normally done. So we have got Banda here, and then we have got who?
Chanda.
Okay. So what you need to do, as you can see here, if you can master the formats, then you're good to go. So the first thing to do is to come up with the opening what? Balance, isn't it?
Balance. Yes.
This one is normally given in the trial what? Balance, isn't it?
Yes.
Then you can less drawings. So there are 2 drawings. Very good. You're understanding, right? There's a principal amount withdrawn, isn't it?
Yes.
Then also, so let me just put this one on its own. I'll put it here. Then there's drawings in form of what? Interest, isn't it?
Yes.
I mean the interest charge. The interest charge on drawings. Apparently we just have the principal. We also have to less what you call interest on capital, because that was their benefit, isn't it?
Okay.
These guys have chewed the money. Do we less interest on capital or add? No, we add.
I think we add, yes.
I think we need to add. Since this one is benefiting them, it is to their benefit. We add. So then what else do we bring in? Salary.
Salary.
You add as well, isn't it?
Yes.
Then also residual profits. You add, isn't it? You
also
add.
Also interest on loan.
Interest on loan, I think. What did I say? Okay. It is to the benefit of the partner, isn't it?
Yes.
Although it is not there. Yeah, you're right. Then also add any residual profits, isn't it?
Yes.
Or we just call it profit share, isn't it? Profit share.
Yeah.
If it is a loss, you do what? You less. So actually here, our job is not very complicated. We just have to, first of all, populate.
So this format you're using, can I use it in the exam? It's allowed.
It's very good if you can understand. I would have a problem if you're not understanding. But if you're understanding,
seems easy than the one they were teaching us in class.
Yes, this one is the easiest, perhaps, apart from what we don't know. Yes. It's much more fast, actually. So you see, opening balance. So you just need to be careful. If the opening balance is on the credit, it's an addition, eh? But if the opening balance is on the debit, you less sign. Yeah, so okay. Apparently, both partners have got credit balances, isn't it? 1050. So come in as positives, eh? Is that
Yes.
okay?
Yes.
Positives. Then the principal amounts withdrawn 41 Banda Chanda 38. So you bring it in. In fact, it's a less, isn't it? You less
Yes.
this. Because every time you withdraw, you reduce how much you have in the business, isn't it?
Yes.
Yes. There was no interest, so maybe you're lucky. Interest on capital, I think we did some calculations. So now we move away from here briefly and start using what we have done on top.
Okay.
So what figures do you have? I think I've got, this is interest on capital, this
500 and 350.
Yes. So I'll come bring it here. Although they say that there's a way of transposing, I don't know if, yeah, it has worked. It's worked. So you bring it in as an addition, isn't it? Then the
Yes.
salary, I remember it was a 2.5. It was
Yes.
for who? Chanda, right? I remember
Yes.
Chanda. So you allocate to Chanda, is that okay?
Yes.
Then again, you go and get the residual profits. There we go. Residual profits. So again, can transpose. There we go. Hey, what has happened? The transposing has refused. It's refusing. Why? Okay. I'm just going to use numbers here. Just get this and push it where it belongs. All right. We are okay? Yes.
Yes.
Interest on loan, nothing. Nothing. So I think I was supposed to put that one there, isn't it?
Which one?
The profit share is the one that I was talking about, the residue. So the profit share is the one that we're interested in here. The residue profit will only be applicable, I think, to the appropriation account.
Okay.
Okay, so let us try to sum up everything. Can you see? So
Yes.
the first partner, it appears as if their position has gone down, while the second partner, their position has improved, eh?
Yes. Imbalances.
You know, the main reason for I think this one was a big figure, and also what other problem? He never earned the salary, isn't it?
Yes.
He never earned the salary. So I think that's the reason why he is where he is. Okay, so it's done here. We can now conclude by dealing with the statement of what?
Financial position.
So what I'm going to show you now, and I saw that you had a challenge with the formats. The format I'm going to show you is what you follow in the exams.
Okay. Okay.
You follow it religiously. Hazard. Which date?
December 2022.
Yeah. So I like to make it a bit simple also here. No putting those rulers. It's a waste of time to be using rulers. So we start with assets, isn't it? So I saw fixtures and fittings, eh?
Yes.
Just open brackets and go to your balance sheet. So
they were just office.
oh, it's office
furniture.
furniture. All right. So anyway, I'll change it. Go to your brackets, to your trial balance and get your fixtures. It appears as if there's no accumulated depreciation, so it was a very simple question, but you only need to use the 300 that is in note 5, eh?
Yes.
So we're told office what?
Office furniture. So I have another question. So on assets, do I need to be specifying that these are non-current assets, these are current assets?
Yes, it's a must. That is a serious must. If you don't specify, it will be very difficult for you to get your easy marks. So you can see there's a 27 there, isn't it?
Yes.
So we go to, so the reason why you're asking is because I didn't specify. So non-current, right?
Yes.
Okay, go to current assets. So what do you expect here? Stock?
Inventory, yes.
What else? Receivables?
Yes.
What else? And the prepayments. I think we had a prepayment, right?
Yes, we did.
It's actually to be said prepaid rent, isn't it? And rates.
Yes. In the adjustments, it was just rent.
Wow. I hope I didn't see rent and rates. Oh, it's supposed to be. Okay, we'll correct it even there.
Yes.
Yes. And then cash. What do we have any cash?
Cash, no.
Bank,
But we have
yes.
bank.
So it's cash at bank, eh?
Yes.
Mm-hmm. So almost there, isn't it?
Yes.
All right. Let's try to just counter check here. So stock closing, was it a 5-1?
The 5-1, yes.
Put it in that first column. Receivables, you go to your trial balance.
It was 9,300.
Yes. 93. Repayment, you come down to the notes. 150, right?
Yes.
Then bank, 6. Is that correct?
Yes.
There we go.
No, bank is 8.
It's not the last one. It is 8350. Oh, yes. Thank you for that. So we can sum up. Like always. So what is the figure for our total assets? You add the 2, isn't it?
Yes.
So you need to follow this format in the exams, all right?
Okay. So like for the office furniture, I can be making the adjustments within the same line, like the way I've done it here.
Yes. It's very much fast from my experience. It is faster than doing the tables. Don't do the tables. I don't advise you. So you know the tables, what they do? They'll say cost, depreciation, the net book value or carrying amount. That's a waste of time.
Okay.
Next stop is what? Capital and what?
Capital.
Capital and what?
Capital and liabilities.
So when you say capital, we have got 2 partners. There is who and who?
Chanda and Wanda. Wanda and Chanda.
Mm-hmm. So these you get from the trial balance, isn't it?
Yes.
How much is the capital for? I think there was a 10,007, isn't it?
Yes.
Yes.
5,000.
Then what else do you have now? Current what? Accounts, isn't it? You bring
Yes.
them in as well. Yes. I hope you are seeing what we are doing here. So that, so you can sum up these. That would be a 17,000, right?
Yes.
But they must be separated. You remember what we had? Just from doing the calculations.
Mm-hmm.
That is the closing balance on the current account. That's the only thing we are interested in. You can see here. Yes.
Okay.
You've seen that, eh? Those are the figures I was interested in. So I'll just do. Wow. This computer is now misbehaving. It's better. It's overloaded. I think I need to remove some data from here. Yeah, there we go. Okay, let me just do this. Wow, it has even taken my numbers off.
There's
These numbers, eh?
Yes.
These are the
9,922.
Come on. Don't overdo things, my computer. Oh, there it is again. There you go. Let's see. Wow. Okay, 990. And what?
260.
Yes, it is 2260. Yes. There we go. 2260. Okay. We add, isn't it?
Yes.
There we go. So your total capital as at that date is how much? You add all these.
Plus 17. It's 2250.
Oh yes. Okay. We come here down here.
So sir,
yes.
I have another question. So for us, when they were teaching us, they told us the heading is supposed to be equity, then you bring in capital, then this.
These consultants. They are consultants. At this stage of your studies, whether you state equity or capital, you'll not be penalized.
Oh, okay.
Yeah, I think as you go up, might be very serious.
Okay. So we're not involved in any drawings?
We already accounted for it in the appropriation, in the current account.
Oh, in the current account.
So we're not supposed to double count, all right?
Okay, sir.
So non-current liabilities. Was there any loan? There was nothing. We never saw any loan, isn't it?
Only have payables.
Current liabilities, isn't it?
Yes.
current liabilities, you don't only have payables, I think you also have got accruals. You remember accruals?
Oh, yes, for wages.
So 4.6, then there is accruals for wages of 750. So payables, we said how much? 4.6.
Yes.
And then accruals, you say 7 what? 750. Okay. There is there we go. That's a number there.
Yes.
So when we add the two, this plus that, how much are we getting? 25,600. Is this what we have there on top? Yes, it is. So if you follow the double entry, we expect you to balance. To balance. So it's called capital plus what? And liabilities. Any questions? You have now known how to be efficient, eh?
I'll just take hold of the assets, the formats.
The formats, yes. So I'm sharing with you this week. You need to. You need to familiarize yourself. Then I'll share with you some other works. You need to follow the paper. Once you see the paper, you go and download it on the Zika website.
Okay.
So thank you very much. We end.
All right, sir.